What's up today?
Hey, what's up, everybody? And Scott, I went ahead and on the fly switched my audio and my audio input, and hopefully I'm coming through okay.
You sound,
Thumbs up?
Yeah,
yeah,
Okay, perfect. All right, great success. Hello,
sounds good to
Steve.
me. Hello, Jamie. How are you?
And I'm doing well for this Monday, and hello to
Wonderful.
everyone in attendance. Welcome to the Monday office hours. Let me do a little desktop management here, and then okay, good to go. So everybody can see my screen. Welcome, August 6th. Here we are into the, I guess technically the last month of summer, and already the 6th. So boom, boom, boom. The fall is going to be up on us pretty quick here. So it should get a lot more interesting as that time draws near. Not to try to dictate what the market's going to do or predict or anything, but you know, the summers used to be kind of slow and methodically boring, but they've changed. All right, so things stay pretty interesting here lately, the past few years when it comes to summer. But we all know things like to heat up in the fall. Everybody's back from their vacations as well, and it's just time to get going here. So that will be upon us soon. So before we get into today's content, I do want to take a brief moment to make the lawyers out there rest a little bit easier at night by telling you that all of the information that we share with you in these webinars, whether it's the 5 o'clock series or the TI University series, total of 9 webinars a week we're hosting. Everything we share with you is for educational purposes only. If you do need investment advice, what to buy, when to sell it, all that good stuff, please seek out a registered investment advisor or licensed broker that can help you out with that type of activity. All right. And for the new folks, and you know, kind of curious, I bet we've got some new people in here from our recently largest ever test drive, which was a great success. So for the newer folks that might be in attendance today, just want to take a brief moment and let you know about those 9 webinars that we're hosting on a weekly basis here. But before we get into that, one very, very extremely valuable asset that you may or may not be aware of is our trading room hosted by Mr. Barry Anderson. Barry opens the room up 30 minutes before the market, and it's a great place, especially when you're brand new, to glean a lot of helpful information and not only learn about the technology as Barry uses it in his trading methodology, but we've also got a lot of people in there. All right, a lot of people to answer questions in the chat. If Barry's too busy, we've got some other guys in there that can kind of field that. So I don't know if you've shopped around trading rooms, so to speak, but if you have put in a little time there, there's quite a few of them out there. Not a lot of them are free, all right? So this is another added benefit that we bring to the table. We provide you with that, with experienced trader running the place, being the moderator, along with all the other people that choose to make that room their home. So if you haven't checked out Barry's room, get on over there and sign up. You won't be sorry. Of course, you get myself and Steve with office hours on Monday. Steve takes the helm on Tuesdays, but will not be taking the helm tomorrow, I believe, Steve, correct?
Correct. We're not able to make the webinar tomorrow. Get an email coming out that tomorrow's webinar is canceled.
Right, right. We've got kind of a important TI meeting that we all have to attend, so putting the kibosh on tomorrow's office hours webinar. Wednesdays, we like to spice it up a little bit. That's when you get the founder and CEO of the company, our good friend and leader, Dan Merkin, along with Brad Williams, who's our chief technical officer. So definitely change the pace there, and always good. Come with any questions about the technology, and Dan's always pretty good at giving people advanced peeks of what's to come down the developmental pipeline as well. Andy's going to round out our 5 p.m. Eastern webinars on Thursday with the Trading Studio, and I ride shotgun with him. And for this particular series, we kind of change it up completely on Friday and do a 3-hour support webinar where you can come with basically just about anything TI related. Good part about that session is not only do you have 1, 2, 3 brains in there, but typically, unless somebody's on vacation, which it's kind of busy vacation season right now, you got 4 guys in there. All right, myself, Steve, Andy, and Sean, all users of the product for a very long time, all with very lengthy trading careers as well. So it's a great place to come get what you need. These are the other webinars that we're hosting. throughout the week. These start at 12 p.m. Eastern, Monday through Thursday. You have Beginners 101 all the way up to Advanced 401, which I happen to host on Thursdays. We do recommend that you take these guys in order because what you learn in 101 is going to be needed to understand 201, so forth and so on. Once again, from the webinar sign-up page on the website, you can sign up for all these guys. Make sure you don't miss out. As well, we have recorded the first 4 of these and posted them to our YouTube channel. So if you can't make the live version, you can always check out the recorded version on our YouTube channel. Quick little peek here about how everyone that uses the product, and even some that don't, that have begun to use the product since then, how people are responding to the release of our AI. And we can see here, orange corresponding with January 2016 when we introduced the first AI module. And if you've been keeping up, you know that we now have 3 of those guys, or girls, I should say in this instance, because they're all versions of Holly. And this little guy has been coming up in conversation a lot more lately, just simply because we've had additional downside volatility, which is natural, even in a perpetual bull market, which is evident apparently, so they tell me, the experts anyway. But more and more short opportunities have been showing their faces simply because there's more stocks going up, but we do get down days every once in a while here, and boy, we've had some textbook illustrations, no pun intended, on some of these patterns that we talk about in this book. And when I say we, I mean myself, Sean, Andy, and Steve. We all contributed our favorite patterns and sections to this book, and if you've taken the time to go to the web address that you see right here and downloaded this content and absorbed it, then you have probably profited from some short trades. And if you haven't done that yet, we'll get on in there and download it, absorb the information. When the time comes, it'll be easier for you to pivot to making short trades versus perpetually looking for things that are going up in what might be a bear market at some point in time. Not a matter of if, really, it's just a matter of when. All things in cycles. And the slightly lucky timing of the release of our ebook is illustrated in this chart here. So a little luck involved, but we can see, boy, it became relevant pretty quickly after we released the book. We've been getting a lot of questions here and there as well. Are we going to come out with another book? And we do have one in the hopper, just trying to select the juiciest nuggets for all you guys. And then we probably will see another ebook and probably some additional people contributing their content that weren't necessarily in the first one. All right, thanks for bearing with me you regular attendees. Just like to keep the new people up to speed on what's going on there. So now, Steve, the time has come for you to show us your, pardon that motorcycle zooming by. It's time for you to give us your takes on the market, Steve, where we've been, where we might be going, all that good stuff. If you're ready,
Okay,
I'll push
I'm
it
ready.
on over to you. You know, we did have a giant gap down.
What? I just lost you.
I was saying the gap was, we gapped down, what, 6 cents on the SPY, I think, today?
Oh,
Unless
you're being
I was looking.
facetious.
Yes.
You're being facetious. I got it.
Yeah,
All right.
sarcastic. Yes, I love sarcasm.
Sarcastaball. All right. Yes, Mike C. We will get Michael Noss involved in the next ebook without a doubt. Now that he's part of our team, we're going to definitely tap that resource of knowledge. All right, so welcome to my desktop over here. We're going to look at the markets here just a little bit. SP 500 using the SPY for the moment. Notice, again, back the many times back in the February, March, April, May months, we were tapping on this 200-day rising moving average. And then beyond the May months, we built a nice base camp above that 200-day moving average. We didn't even get back to it and touch on it. And then we pushed through this first orange level of resistance, going back to right here, March 12th high, March 13th high, broke through and then pulled back and retested it basically most of last week. And then end of last week, Thursday, Friday, we took off and then following through today. We are just a mere razor's edge here, margin between all-time highs and today's closing price. So I think this week, guys, maybe opportunity to see the market attempt to go to all-time highs in the S&P 500, the most ubiquitous benchmark that most people refer to, not the technology-laden Qs as much. They're a close second, definitely not the IWM, the Russell 2000, or even the Dow. It's pretty much the S&P 500. That's the benchmark by which all of the high water marks and relative performance metrics go for hedge funds and other money managers. It all reports back to this guy. So that's why we always start with the SPY ETF. And what it's showing us here again, once again, there is zero case to be made for the bears right now. And the path of least resistance is up. As I mentioned a minute ago, I think it's a foregone conclusion. We are going to come and test this higher orange line, which corresponds to all-time highs in the S&P. I think it's just a matter of time. Now, the way in which we do it might be interesting. We had a big green bar Thursday, Friday, and today. Ideally, maybe we'll get up and kiss that level and move sideways for a few days and then push through it, because my my thinking has always been that stock prices expend energy moving from A to B, and you can definitely expend a lot of energy with 4 or 5 green candles in a row, but then when you get to that level of resistance where all the supply is waiting for sale, there's not enough gas in the tank to usually push through that like hot knife through butter. So it's going to be required, again, some sort of a backing and sideways filling and congestion and building up potential energy to then push through maybe later in the week or next week, who knows, but I feel like it's coming. So no bear case whatsoever. We're above all of our key moving averages. We're back into the sweet spot here. I call it the sweet spot because this was a major resistance back here and congestion here. We're now trading back above that after pulling back and testing it again. That test, in my mind, only confirmed that it was, in a sense, a proper pivot level. Prior resistance becomes future support from which we can move higher on. So no bear case to be found anywhere in the building yet. That can always change. There's always black swans out there that can come in and ruin everybody's model. But looking at the footprints in the sand here, the price action wants to move higher, and it probably wants to test all-time highs either this week or early next week. We shall see. As I said, the NASDAQ is a good close second place to the ubiquity and the widespread benchmark feeling towards the S&P 500. NASDAQ is really what's driving these markets, of course, with technology and social media as well. So the NASDAQ actually put in a new all-time high about 7 to 8 days ago here. And so we very well could come back, and we could probably just go ahead and put a line in there right now. That's the next bogey, the next target for a index that's making higher lows. And the higher lows are what is the proper definition that makes an uptrend. A downtrend would be lower highs. We don't have that here. We have higher lows. Not only that, look at the 50-day moving average here in blue. All week, in hindsight, looking left on the chart, that level was very much indicative. In other words, we could even scratch the surface and go deeper. Why? Well, maybe there's a lot of money managers out there that are so bullish on the market right now, they're not going to allow a price to dip much below the 50-day moving average. That's a pretty middle of the road benchmark moving average, and it definitely held, as we can see, back here in late June, and then it held last week in late July, early August here. So this 50-day blue line is something that has been demonstrated in the past to hold water in terms of a support level. And again, I added the color that it maybe just be that there's so many bulls out there, they're just not allowing that 50-day moving average to be breached before they feel like they might miss the opportunity to buy the pullback. So again, over here in the NASDAQ, until things change, there is zero bear case to be made. The path of least resistance remains up. Russell 2000 is kind of a giant flag here going back a month and a half, but again, I think it's probably worth drawing these lines, and those are going to be all-time highs in the Russell 2000 or the IWM ETF. These are your small cap indexed 2,000 companies in the small cap making up this index. Nothing really bearish going on here. It's holding its levels. Resistance was back here, and then support showed up for the most part right here. So this is our sweet spot that we're in right now for the IWM. And then lastly, the Dow, as represented by the DIA, we can see is actually getting ready to finally maybe stop playing so much catch up. I mean, the all-time highs back here in the Dow are essentially that orange line. Let's go ahead and delete this orange line, because it seems like the current battlefront seems to be right here. which was resistance back in early mid-March, was resistance last week, and now we've got 3 green candles, a little bit of consolidation. I bet you we push through these recent highs here. Just move that up a little bit. This week and get back on track with catching the Dow back up to everything else. And again, no real bearish case to be made here. I'll end on the FANG stocks, which is F-A-A-N-G, which is a new acronym over the last couple of years to really highlight the strength and the heavy weighting of those particular stocks in the indexes. And that, of course, would be Facebook. Horrible gap down from bad earnings, but they're trying to recover. You know, personally, I think this is just a condition by the dip people. So that's Facebook, but nonetheless, you see a nice strong green candle today. That certainly bodes well for the bigger markets. The first A we'll call Apple. That one's been not even looking back since good earnings, definitely holding the market up today in that one. Amazon is the second A of the FANG. Nice green candle today, moving higher, probably wants to come up in all-time highs again. We got Netflix, not so much. You know, they bought back Netflix after a horrible earnings drubbing, and then that was the conditioned buyers that basically slowly got the sellers back in their face. And now we're even below where those buyers are, maybe a bit above where the stock gap down. So Netflix, green candle today, but not a great chart, but still kind of hanging in there. And then lastly, Google to round out the FAANG acronym. Google's been going sideways for 5 days, but not selling off, filling that gap. So all's good on the FANG front, which obviously is going to translate into a very healthy S&P 500 and a healthy NASDAQ. And that's where we find
Steve,
ourselves.
that's
Yo.
excellent stuff. I'm glad you threw that bonus content in there at the end, but we have to at least look at Twitter. Let's just look at Twitter, even though it's not part
Even
of
though it's not part of the
FANG.
FANG, I'm happy to look at Twitter.
Because
I asked
look at
somebody.
that.
I asked somebody on Twitter this morning, I said, I don't think the footprints in the sand are giving us a lot of optimism here. This thing probably wants to go lower. And I had a few people fight me on that on social media, and I politely said, well, that's what makes a market, my opinion versus yours. And I'm just curious, I'm basing mine off of technical analysis. What are you basing yours off? And both people that were challenging me said, oh, fundamentals, top line, bottom line, Jack's cleaning up the place, network. I said, okay, so all those things they just told me are pie in the sky hopes. I'm an old school guy. I'm just going to look at the footprints in the sand of what the price action is telling me. And thank you, Jamie, for bringing that up. The price action in Twitter is horrendous. I mean, it took a drubbing just like Facebook did, but you would expect Twitter to maybe start rebounding kind of like Facebook has today, and it is not. And I just don't know what the case is going to be to pull this thing out of the doldrums that it's in right now. But I'm not going to concern myself with what Jack's doing or not doing or cleaning up or not cleaning up. I just go on price action alone. And the buyers are not jumping back into this. And if they are, then maybe it's the sellers that are much more stronger in keeping a lid on that. So yeah, good point to bring up there. Thanks.
Well, it's like the old song, they couldn't keep Jack from being happy.
Who sung that?
I think that was, who was that, The Who?
Could be, yeah.
Anyway, I don't know why that popped in. But anyway, I guess it's because it's Jack. All right, Steve, thanks a bunch, man. Good stuff. Let me grab the helm here. All right. Yes, technology working as it should.
All right, I got it.
Hopefully I'm back here. Okay.
Yep.
All right. So I don't know about everybody out there, but I mean, to see what the market did today, and let me just pop up another intraday here. Here we're looking at 5 minutes. Let me shrink it down a bit here. 15 is a little easier to look at here. But yeah, I mean, just the escalator keeps on going, and I think I was a little caught off guard by the upward, movement. Now, once we broke these little planes here and got cooking, well, then the rest is history. But the reason it caught me a little off guard today, my expectations, right? I like to view.
Sorry, Jamie, quick question.
Yeah.
The slideshow seems to be sitting on top of your other trade ideas windows. I'm not sure why, if that's you're seeing that or if only we're seeing that.
So you're just seeing my browser here sitting on top of my trade ideas. Yeah.
Yeah. Okay, I just want to make sure you didn't think.
That's by design. Yeah.
Okay. Oh, by design. I'm so sorry.
Well, I mean, yeah, my unicorns aren't visible or my Care Bears, right?
I didn't realize you had, I thought you were trying to get us to look at your desktop of trade ideas. My bad. I'll go back on mute.
No worries. I was just coming over here to show what my compare count readings were before we launched in here, kind of talking about, where did I lose my spot here? Our expectations, right? Always kind of like to reference the compare count window. Oops. after the first 15 minutes, because a lot of the times this guy right here can give me some guidance, right? But anytime I see a bias of less than 50% one way or the other, and especially the closer we get to like a 49.51, which we weren't too far away from that after the first 15 today, I saw 53% this, to the downside, 47% green. I'm thinking to myself, well, it is Monday, not to try to put certain days into certain boxes where the market does better. But I'm thinking to myself, okay, well, what does this mean to me? How can this help me set my expectations? And pretty much what I tell myself is, eh, anything goes, right? There's not one clear bias one way or the other. Slight negative, but not really strong enough to, change my perception, right? Because once again, preconceived notions always a very bad thing to arrive at a session with. Now we can try to temper expectations, but bottom line, lick my finger, stick it up in the air, slight breeze, but the breeze is not really coming out of one direction. So basically what I tell myself is, well, we'll just have to wait and see what happens. Now, we did have some great upside movement, as we can see right here from the SPY, right? But after that first 15 minutes, we're just sitting right here after a nice little, pull to the downside to create that wick here. So pretty much, everybody's in the same boat at that time, crystal ball or not, they don't work, right? So what do we get? A little lift right after that. Fine and good, with the expectations of anything could happen. But of course, we always like to know what neighborhood we're in, right? Well, we were at the top here. We weren't down here at the bottom, right? We had expended two days to get up here, and then we start cracking these little levels up here. I need to do some line cleaning over here. But in any case, so this guy wasn't a whole lot of help, just telling me, hey, anything's possible. Now, what did we have on volume today after everything was said and done? Well, here we are looking at the SPY as of the close. SPY came in at 3/4 of normal volume and was running low pretty much all day on a relative volume level. And so were all the other indices, right? Were these tracking ETFs, so to speak. Dow was way behind, just finished, not quite 70% of normal. So we finished on lower than normal volume, right? Which doesn't surprise me. That's kind of how the market's been working here lately. You can go up on high volume, go up on low volume. But today is what I like to refer to as a low volume balloon ride, because the volume wasn't telling us anything in that first 15 minutes, but we just kept going up, 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 and up. So I'd like to tie all this into, how does this relate to Holly, all right? How does this relate to the AI and how we could have used it as an informational lever today? Get us a little bit of leverage, so to speak, an edge, right? You always hear people say that. Well, if you want to make money in the market, you got to have an edge. Of course, everybody's edge is different. Some people's edge is their ability to read charts very quickly and size up risk, right? Other people's edge is statistical. Hey, that's what Holly's edge is, statistical. So from a human perspective, I found it very interesting this morning. I'm like, okay, based on the things that I like to look at, don't really see a whole lot here. Just telling me to, hey, be cautious, wait for things to develop. But boy, not Holly, not today. Was a very, very busy girl, or I should say group of siblings here. So, if we're looking over here at the channel bar, Holly number one, probably the best performer today, 3.15 points on only 8 trades. We had Grail with the highest point total, and 6.44 on 25 trades. Not too far behind Holly Neo at 5.21. Took her a little bit more than Holly Neo to get to her total. 30 here, 25 here, and then original Holly AI 8 here. Now, that's a very active day. So you can see here, I've got Holly Grail pulled up, the original. Boy, she came to the party with a very select group of stock, or strategies, I should say. Now, of course, we get the question all the time, what's the difference between the Hollies? Well, Holly Grail 1.0 was the very first one that we came out with. You could say also probably the most conservative model, right? Holly 2.0 and Neo were able to insert custom formulas into them, so therefore they can do calculations that Holly 1.0 cannot do. So she came with the pretty much the thinnest strategy complement here today, but boy, on an 8 trade total, up over 3 points today. Now, what I really like about Holly 1.0 today is this beginning equity curve, right? And, you know, for those of you who have been following Holly for a while, hopefully this is something that you're paying attention to if you've been to one or two of these webinars and heard me talk about it in the past. But this is typical of what we've been seeing here lately. As the AI accumulates its opening positions, of course, whether that be 3, 4, 2, depending on the total, a bias can be established. And we can see here, Holly's initial opening bias here for 1.0, getting active in about 23 minutes into the market for the first trade, and then boom, before the close of the hour, rattles off 3 longs and then 2 more at about 3 minutes after the top of the hour, all longs. Now, the reason I find this very interesting from a human and an observer standpoint is from the fact that a lot of the days I've got a pretty good idea and a lot of what I think is going to happen coincides with what Holly does. But today was a little different. Today it was me going, I got no idea. I got no idea. You know, my compare counts aren't looking real strong. We just expended a couple days worth of energy getting up here. I don't know. But boy, that is a very good example of what I talk about all the time on the way that we humans perceive things, all right, and the way a statistical model will perceive opportunity out there, all right? So this one just happened to have a really good example of a risk-on trade, choosing to go risk-on and making something out of it. We've got a 0 risk-off profit here. We've got 205 on the table as of the close. Why did Holly get out of it? Profit save. Well, I see she made 0, so how's that a profit, right? Well, I can tell you that right now. I'm going to explain what's going on with that profit save exit and how you can benefit from it. Now, I'm going to go ahead and flip this back over to 5-minute candles just so we've got a little bit more data to look at for the time that Holly was in the trade. Okay, so first and foremost, I really like this trade because it is also exhibiting a very simple pattern that a lot of people like to trade, right? So I went ahead, I don't even know why I drew that line. Let me just push it up here for a minute, all right? I don't want to cover up the blue line here, which is Holly's entry, which is going to correspond perfectly. Once I double click Daku from her trade blotter, all of the information is going to populate here for us based on the AI trading it. So we get a nice little signal right here at, what was the price there, 57.95. This is also corresponding with what we call a daily range break, right? So it's a pattern that this human, Jamie, likes, right? It's also got very strong statistical probability behind it. Sunrise mover, one of the golden oldies, still a top performer since inception back in 2016. Came to the party, it's like, hey, anything I spit out, it's got a 65.3% chance of working today, right? We see the pattern that we also like. Now, that may apply sometimes it does. It's not all the time. It's just an added bonus because we've got the visual confirmation that we like along with statistical probability. That's always a good reason to open up a trade. And we've got our risk clearly defined here at the lower level. We can see it did throw a little curveball. We get up, we get down, completely normal, whether we're trading this system or, you know, a manual trade. A lot of times we get up and then we're down and the trade ebbs and flows through the entry signal before it finally does what we want it to. Other times.
I'm sorry. I'm
No,
just
that's
trying
okay.
to pick
Go
my
ahead.
spot. I just wanted to, I thought this might be a good time to jump in and say, remember this morning how I said, well,
I
Holly's
do.
3 red.
Mm-hmm.
I got a pretty good feeling based on every other day I've seen the last couple of weeks.
Yeah.
The AI gets kind of a slow, soft start, but just seems to always is a definitive word, most often find its way to profitable green by the end of the day. It's rather amazing.
True, true. And I had forgotten about that, Steve. But yeah, I was thinking when you said that, I'm like, yeah, you know, every system's got to take a pullback. You can't just win, win, win all the time. Along with what I was sharing with the group earlier about my expectations. So this is a very good, it's a textbook example of even people like ourselves that have helped develop this technology. You think a certain thing's going to happen. Guess what? It's not what happens. It's not what the stats told us, but hey, we're humans. We're conditioned to do this. But with perseverance and practice, you can break that conditioning, and the more you apply and overlay statistics to your trading platform or your trading routine, they can only enhance. They can only enhance. So let's talk about the risk on potential here. Well, Holly gets in right here, and then she gets out right here for a flat. Doesn't make a whole lot of sense. Well, and I got a simple explanation for you. What makes Holly Holly? Her statistically weighted entries that she brings us every day after going through millions and millions of potential trade candidates that are comprised of all the individual strategies, right? That's what she does. That's her strong suit. Not so good on the exits, right? We had to build in some additional exit criteria other than timed hold, profit target, and stop loss, because we can't have our system, Holly, letting a winner turn into a loser. Pure and simple. That's the reason, right? Now, being perfectionist and wanting better exit criteria, we're constantly working on that. But what's really important is the entry. That's the first and foremost thing, and getting in the money is the second part. So if the trade isn't going her direction, and in this case, for 5, 10, 15, for a very long time here in computer time, let's just call it an hour, it goes sideways, but only about 15, 20 minutes from her entry time. So the simple rule on that logic functionality for profit save as well as reduce exit is, if it's not working over time, kill it prematurely, right? Get out of a winner early, get out of a loser early, because a lot of the times they're just going to keep degrading, right? But we have our skill set. And when I say our skill set, keep in mind the best way to interact with this technology is man working with the machine, creating a hybrid, all right, where she does the heavy lifting, creates all the strategies based on statistical probability and hardcore data analysis, and then lets us worry about the exits because we're a little bit better at reading the tea leaves known as charts, right? And going, it's going sideways. It's not a bad thing. I'm sticking to my hard stop, and everybody's a little bit different. But by simply acknowledging that Holly's getting out of the trade, and you, me, or anybody else using the system that's in the trade saying, I'm staying in, I'm sticking to my hard stop here, and then boom, off to the races. Even better, when you can identify a pattern, a simple pattern such as this, it's fractal. It can occur not only on any time frame, but it can repeat itself throughout the day. So we're already in a tester lot here, maybe a couple hundred shares with Holly. We start to perk up here. We break that previous high just like we did right here early on. Boom, that's a great signal to add to a winning position, which is one of the harder things for a new trader to figure out over time, because you've heard it a million times, but you're still new. And you're like, yeah, well, adding to, I'm just happy that they're winning. I don't know if I want to add to them, right? But when you can identify a simple break, range break such as this, it makes your decision easier, and you can start adding to winning positions and have them continue to go. All right, so I see the questions panel is vacant. That's a good sign, I think. It means you like what you're hearing about, so let's continue here. Now, we do have a risk-on example here in Iridium. I was surprised to see this little guy come through. How many times? All right, well, sorry, ladies and gentlemen, a little noise pollution there. Steve, how many times have we seen this symbol in our trading career? Iridium.
A lot.
But then you won't hear about it for years, right? Until all of a sudden, I guess, for some reason, like the fact that it's at all-time highs, I think. Looks like a little Iridium is getting some attention, right? So once again, here we have Holly getting into the position here, all right? And this is what I was describing earlier. Sometimes they just go right off the bat and look, whoosh, no pain in that little party right there. We took one little pull back down below the entry line, And then after this 5-minute candle, it was off to the races, right? Can't say that I disagree with Holly's exit on this one too much. I mean, sure, this was the high here while she was in the trade, but how would we have known to get out there, right? And maybe if we were looking at some daily, well, no, we can't see anything here because we're looking to the left. It broke through. It's out of the box, right? Not a bad signal. So whether you got out here, 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 or with Holly, not a bad little trade here. Now, of course, it did finish higher. So good rule of thumb, when you're trying to get used to going risk off, risk on, do the old 50-50. If you would have stayed in half in risk on, close out a half with Holly, you would have taken a little drawdown back down to break even, which brings up a good point. If you do the 50-50 and do half with Holly on risk off and want to keep that other half for the larger potential move, well, then you have two choices. You can stick with your original stop, at which point you're putting your first lot profit at risk, or you can revert to a break-even stop to protect what you've taken in the first lot. Now, Murphy's Law, boy, it almost kicked in here. It would have went right down to your stop area. Now, of course, when we're using these levels, it's always a good idea to put your stop a penny or two below, because in this case, it went right down to the stop. Probably didn't get you, but I always put mine a couple of pennies below. But a great example of almost getting stopped out of a risk-on trade, but it not happening, and by the time the day is over, you've got a nice risk-on profit. Now this guy right here, PLNT, probably a better example of what we call a trade around, right? And it goes a little something like this. Holly's spitting out a lot of trades. Of course, this one was the least amount of the day compared to the siblings over here doing 25 and 30. But you're watching other windows. You're trying to keep your eyes on what you've decided is your favorite Holly for the time being. And, you're not going to see or even be able to react to anything. So, of course, in that first hour, hour and a half, depending on how tenacious you are, maybe it's the first 2 hours. These first 2 hours of the day still seem to only last 30 minutes. You're like, what? 2 hours is gone? Okay. Time for lunch, breakfast, wherever you're located. But if you finish your morning routine or, you get a little break in the action, it's always a great idea to see what positions Holly are against Holly, I should say. All right. Because if we pull this guy up, maybe she's about to get stopped out. Maybe, you didn't see the entry, but you're like, wow, she's about to get stopped out here. Okay. Well, if I feel pretty comfortable with what's going on in the daily, well, a lot of the times, sometimes it's the second, third, fourth, fifth, or sixth rat that gets the cheese, as Steve would say. In this case, it was 1, 2. Let's see, I'm getting the blue line is interfering with my entry signal versus my moving average. Okay, so this one, it appeared the third rat got the cheese, Steve. If this is the blue line, which I'll highlight with another line, it's getting mixed in with my moving average there. But here we can see first mouse, second mouse, nope, stop out, third mouse gets the cheese and goes. Now, call it what you will, right? How uncanny it is. So many stop outs occur right on the button. Like the one we were looking at previously, penny away. This one looks like just a hair below. Just get those stop outs, right? Once we see Holly approaching a stop or get stopped out, and we see this type of action, right? Well, we can get a better price. Maybe we if we would have stuck to the same price target here, or the stop loss, I should say, it would have came down here and got us again, barely. But pay attention to the levels. There is no magic trick. It's just simply a fact of sometimes the timing being off, which leads to another good point. All the statistical probability that you see here is good for the session. It's good for the entire day. Now, sometimes they're going to consolidate and tickle that stop area before they go, at which point you can take all the guesswork out and go, you know what? I'm not even going to mess with it. I'm not going to try about picking the wicks down here or using this. I'm just going to wait for it to have this third occurrence through this high level here, or what Holly is using as the entry price. If it gets back up there, I'll pay attention to it, right? My risk will be defined once again. So lots of different ways to play this, just depending on your, you know, how conservative or how aggressive you are on entries. And a lot of the times that depends on how well we're doing for the day. If we're really on a good streak here and we've got many fewer losers than we have winners, we might be willing to take a little bit more risk. Everybody's aptitude's a little bit different. But just keep in mind, there's a lot of value that Holly brings to the table that you can't necessarily view in a column here, right? Ways to use the technology. Steve and Andy and Sean and I would all refer to it as the that guy example. Used to be a guy in an office that we'd take advantage of.
Key off of, yeah.
Yeah, but now it's an AI, and there's three different ones. And since we're on the topic of three different AIs, yeah, it's really a bummer that we can't view all the trades at once, or an omnibus blotter, because we're missing trades from time to time. But fear not, I was just reassured today it's in development and hopefully coming out pretty soon. All right, Peter, I guess he got his blue arrow questions answered there, Steve. Okay.
I'm sorry, what'd you say, Jamie?
No, I just noticed, I think you answered Peter's blue arrow
Yeah, I
question.
tried twice. I wasn't sure if he was talking about that second purple arrow to close the trade or the two blue arrows. One highlights the candle and one highlights the price level.
Right, and I'll just clarify that real quick here. All right, so DOCU that I just double clicked on, it's going to have this arrow underneath on the candle, and then the blue arrow here is corresponding with the exact price or area in the candle, which is also going to correspond with the blue box that you see over here. All right, so all of that juiciness was just out of Holly AI today, the first one, right? We had a couple of great examples of risk on, and even how to, play off of when she's down and the trade looks good, being able to get a better price and maybe take on a little bit less risk. But let's look at the more active Holly 2.0 today. Well, actually, why did I do that? I like the way that I'm displaying my other blotter. So give me 1 second here. Just hit the wrong button there. We'll just switch the segment instead of going to the channel, because everybody's a little different. I like to view the all trades blotter versus the open closed. So we'll just change the segment like so, because there's more just general goodness here. Once this guy wants to load up here. All right, so let's also focus on max profit column, because this is something that I like to do each and every day. And you know what? I hadn't even paid attention to Holly 2.0 max profit column today, and I'm like, fingers crossed over here. I hope it looks the same. Was I surprised when I see all these numbers here? Nope, quite gleeful actually. All right, because look at this. Look, especially on a day where human Jamie, was like, I don't know, it's a Monday, my readings aren't that good. I low volume, didn't matter. Now, max profit, why is this column special? Because this shows us how much every position was up max during Holly's risk off time. Now, we had 25 trades, and if we eliminate kind of the two laggards, this one only got up 2 cents before it folded over. This one never did, but this one was up 8 before Holly got out. This 12, 13, and on, right? So just being able to do this, to achieve these results right here, there's no human out there. If there is a human out there posting these kinds of results, by all means, kudos to you. You are indeed an anomaly, right? But this not only is happening today, but it's happening just about every session, right? So once again, something that's not paid attention to, but probably should be paid attention to from a statistical standpoint. And one more thing to talk about while we're talking about the Hollies here and trying to drive home why you should be allocating a large portion of your trading day on these signals, is because how many do we have total here today? 55, 63 total signals. Well, as we like to show people all the time when we're in the learning environment here, let's just pull out our old show me icon and just pop into our histogram, and we can see, looks a little bit lower than normal, Steve. Started the day watching 7,115 stocks. Now, that's probably because I have, it's just market in general, but in any case, this number fluctuates between this and 7,600. No big deal, right? But Holly traded, what did I say, 63 times today? 63 calls out of 7,115 candidates. Now, of course, by applying some rudimentary filtering, like it has to trade some volume, right? And, you know, can't be some crazy, wicked looking stock. That's pretty impressive, all right? You were just handed, if you're a premium subscriber, probably what could be argued to be 63 of the best signals that you could have ever hoped to have gotten today, right? That's what the AI is bringing to the party each and every day. And from a per share standpoint, you know, I've recently started scratching at the surface again, Steve, because it makes a lot of sense from a statistical standpoint. And of course, it's all dependent upon your commission structure. You know, the guy paying $5 a pop is taking a big hit compared to the guy that's paying 30 cents a pop for 100 share lot. So, of course, that's all up for anybody to get on their own. It's not like you have to be in a secret club to get those rates. You just have to know where to go. But that's going to make a big difference in your overall net, right? But you know, even if you're a guy or a gal out there paying $5 a trade, you know, if you trade 100 shares, you got to make $10, right? You got to make that penny, and then that just goes to the house. But every penny you're averaging above 1 or 2 cents a share, well, that's just gravy, right? That's actually a working trading strategy. Well, how much per share are you pulling in? 3 cents? And your cost is a penny, or your cost is half a penny, or your cost is a third of a penny, or 2/3 of a penny. That's all up for, you know, for each and every person to achieve. But then we start talking about Holly. And it just so happens that Holly, on her 63 trades today, if we tally up these points and divide by 63, ladies and gentlemen, at the end of the day, 23 cents per share on average. The past couple of decent winning days, she was only up there around 15, right? And then today, when humans, even myself in here, were like, I'm uncertain about, you know, the direction of the market. My usual indicators aren't making me feel warm and fuzzy. You know, after the first 30 minutes, I can see the volume is really low. But then to see this AI cluster perform at this level, and not only, you know, some of these days where we go up on low volume, like the balloon ride, you're like, I don't feel bad about not making a lot of money, and a lot of your other people will, you know, commiserate with you. Oh yeah, well there's just, you know, I couldn't pull the trigger with that low volume and everything. And then to see the exact same mind exercise play out today, but then to see the AI go, you know what? Don't give two cares. Balloon's going up. I'm going to be in it, and what you see is what happened today, right? So I'm kind of just tickled pink and beside myself because, well, Steve can, you know, relate to this. Holly's like a child, you know. We all had a part in bringing her online. We've all had a part in maintaining and contributing to the system that you see here. So a great day on many fronts. Great day on many fronts. Completely elated with Holly's performance, and hopefully all of you out there feel the same way and were able to participate. Of course, not in all of this alpha bonanza, but enough to where you feel, yeah, can't wait to get up, try it again tomorrow. Okay, well, I see we're at the end of our time here. And Steve, we've got, you know, we've got a lot of different webinars that deal with education. I invite you to come to all of them. But Holly has been stealing the show here. in office hours as of late, simply because it's what's working best, right? So actually, this is part of the software, and this is actually teaching you how to interact with the software. But if you need a more hands-on, like what does this widget do, what does that widget do, by all means come to our TI University or the Friday webinar. We'll get you taken care of.
I'm also typing a nice getting started video, and the link to the video, which is about an hour long, and it's going to be in the chat window and for the
Right, is that the
remainder of our
unboxing?
webinar. Yeah, that one.
Yeah. And that's a real great video there for you to try out there, Steve. Okay, Scott, well, I believe our time is over. If you're ready to let everybody know how they can save with the latest discount code, well, then we're ready for you.
Yeah, it sounds good. Thank you. Couple items on the way out. There's a podcast, comes out on Fridays. Make sure you're subscribed so you don't miss an episode. Just search for Trade Ideas Podcast in the app you use to listen to podcasts and hit the subscribe button. Then you will get the newest episode and be ready to get the next one, which usually come out on Fridays. There's a discount code. Be sure to use it before the end of the month. Heatwave, all caps. Saves you 15% off your first month or year of Trade Ideas. You can also use the same code on your first installment of an upgrade from standard to premium, so keep that in mind too. It's Heatwave, all caps. Just like you see here, you'll get an email reminder tomorrow with that code also, and a link to the replay of the podcast. Thanks everyone for attending. Any questions, shoot an email to info@trade-ideas.com. That'll get forwarded to the appropriate team member that goes into our help desk software. Also follow Steve Gomez at Today Trader and Jamie Hodge at QuantBot. Also Trade Ideas, and facebook.com/Trade Ideas Pros, how to find us on Facebook. So you can like our page and share everything we post with your friends. Thank you, Jamie. Thank you, Steve. Thanks, everyone.
All right.
Have a good
See you
one.
next time.
Later.
See you guys on the flip side. Bye-bye.